In today's video, we're going to be discussing PayPal and Square, PYPY and SQY. These are the new Yieldmax ETFs that just launched for the blockchain fintech space. So we're going to see how we're playing this out of our portfolio in order to live financially free out of our brokerage accounts. Stay tuned. So we earn over $100,000 per year in dividends at this channel, as you know. And our performance and value shows that we're up 29% for the year. We were up 50% for the year formerly, but now the market's pulling back, so we're pulling back with it. So it shows we're up 29% and the NASDAQ's up 27%. We're always trying to match the S&P and the NASDAQ or stay right in between. And so that's where we're at. We're actually beating all indexes. And on a daily basis, we're down 7,500 again. Now that might seem worrisome, but 0.1% roughly is what we're down. And then look at the NASDAQ, 1.15. So we're down 1.19 and the NASDAQ's down 1.15. So to me, this is all, once again, good performance, even though Cornerstone is the one that's struggling for us again today. Now, just a quick update on Cornerstone. This video is about blockchain. It's about Square. It's about PayPal. But in order to live financially free out of a brokerage account, you have to take into account all of the holdings in your portfolio. I'm out here traveling the world again, as you know. So to me, the only thing that matters is, am I in a margin call? Am I close to a margin call? And then are we performing in line with the indexes? So today we're performing in line with the indexes, and that's all that matters. Cornerstone, it's down a little bit more today though than the indexes, 1.77 as you can see. Because, well, we don't really know the answer, but I have no crystal ball. But just a quick update. I already updated Discord members about my thoughts for Cornerstone, but basically it's just, and you can see all the drop downs coming from Discord. But basically Cornerstone is, every October it has its dividends reset. So it has a 20% dividend. It's a 5-star fund, as you can see here, and it beats the indexes, as you can see there, okay? You have to factor back in dividends and drips in order to get the true chart for Cornerstone. So yes, it's down today a little bit more than the other holdings in our account because the dividends get reset in October, and maybe there's some repositioning happening as a result of that. But long term, the C's should recover. They always do, and they've been around for decades, so I don't see why this month is anything unusual. I've been getting a ton of emails from clients about what's going on with Cornerstone, and I'm sure I'm going to get plenty of haters in the comments when y'all watch this video talking about how Cornerstone is just taking a beating, but it's really not. It's been outperforming. That's how we're outperforming. You saw my 29% performance. Look, my whole portfolio is Cornerstone, 500 grand. Everything else is minuscule compared to it. So I'm not worried about the volatility that we're seeing in the C. Okay, but if you want to play Cornerstone properly, you have to time it around its rights offering and ask for the special drip. Okay, that's just for all the newcomers at this channel. Here's the drip really quick, really fast, guys. 7.6. We're going to get to the PayPal and the Square. But look, you can't just be buying PayPal and Square in your account and thinking that everything is okay. You have to be diversified with indexes, and also the banks within the S&P, you think they're really going to relinquish control to blockchain companies? You know, do you think JP Morgan's going to allow itself to be displaced? I don't think so. I think they're all the S&P 500 companies are going to dominate, and the banks are no different, and they'll either develop their own blockchain in-house or they'll make acquisitions as needed. So I'm staying in the indexes, which is Cornerstone. CLM is the index. And so look at the market price, $7 there, and look at the NAV price, $6. Okay, so $6.49. Once my screen reloads, you'll see that that's a 20% gain. Here we go again. Let me reload this. Cornerstone, CLM. Again, market price $7, but you go down to the drip price of $6. So it takes this dividend every month and reinvests it down at the NAV for extra gain. 17% gain there, 651, 1720. Look, 679, 12%. So this is why Cornerstone is the best vehicle in the world, and the banks within the S&P should still dominate. So I'm putting most of my money in this. As you can see, Square and PayPal, look, I have only $500 in Square, for example, because Square is not even in the indexes. Okay, I typed in Square on the S&P holdings. Look, it's not there. Now you type in PayPal, okay, and you'll see that it's a part of the indexes. So I have a larger amount in PayPal, then Square. We're going to get into that in 1 second. But once again, these are all in the indexes within the financial sector. So you might as well just own the index outright. And I like JEPI for that as well. JEPI is the S&P and it has a really large dividend. The problem with JEPI is that it's 50% maintenance, okay? That's why Cornerstone is the best, because not only does it have a 20% dividend that drips down at the NAV each month, and it gives you 30% premiums that it averages per year. Go look that up. But it's 30% maintenance. So if we go to a trading tab of Cornerstone, you'll see here that it's maintenance here is 30%. See, 30. So this is how I live financially free out of my brokerage account. If you need help understanding more about maintenance, that's in my margin e-guide. Okay, I have 4 e-guides: volume 1, fundamental analysis; volume 2, technical analysis; volume 3, how to use margin to live financially free out of your account; and volume 4 is how to play Cornerstone properly. Okay, and that's what we create a Discord for, so that we could alert each other of the rights offering in Cornerstone. Many closed-end funds have rights offerings every year. Cornerstone's no different, and that's how you really level up your account, is with the rights offering. The next way you level up your account is with dividends, okay? And that's what PayPal and Square provide. Well, PYPY and SQY, okay? I don't know what the dividend will be on that. We can check the implied volatility on Square and PayPal, and I'm sure it's really high. So I'm sure that you're going to see quite a large dividend yield for these funds, but you can't put all your money in it because they're 50% maintenance, and they're risky, and they're not even a part of the indexes. See, there's another comment from a YouTube subscriber that you just saw drop down for Cornerstone. So hopefully he watches this video, and he or she watched the video, and it reassures them a little bit more. I don't really care if anyone's feeling the pain here. It's not like I work for Cornerstone. It's not like I know anything about Cornerstone. I have no crystal ball for any of these investments. I'm only living freely out of my account, and that's all I care about. I try to find the highest dividend yields around that are indexed, because if you don't tie to the indexes, then you lose over the long term, statistically speaking. PayPal and Square are not the indexes. Now, you want to have a piece of them because you want to be tied to the blockchain fintech space. I get it, but you got to tie everything to the indexes. So Defiance, JEPI, has a really nice yield, and it is the index, but it doesn't give you those 30% premiums like Cornerstone typically, and it's, again, 50% maintenance. So that takes up all of my available withdrawal. That means that here's the available withdrawal, 187, right? So I have to have over a 30% correction in the market just to get margin called, and that's not going to happen because I have 20% dividends from Cornerstone and 30% plus dividends from JEPY that will offset those downturns. So in a 20% down market, I break even. But the bigger thing to note about a crash is that I have put options. I always keep my put options on, which I closed some today, but I always keep these put options on. So that's how I stay protected beyond a crash, okay? These put options don't work much on a given day like today. They're up 96%. As you can see, that's not bad, the October Qs. But they're not going to make a killing on a given day for me. It's more about if the market were to crash 30% in a day or a week, that these would really clean up for me. So beyond the 20% dividends that we receive in Cornerstone and the 30% dividends that we receive in JEPY and all these other Yieldmax funds, beyond the dividend yields, which give us downside cushion, okay, we also have those put options for insurance against a market crash. So I'm never worried about what the market's doing. I'm just worried about if we're in line with the market. 1.25, it's pretty close. Okay, we look above, the NASDAQ is down 1.26. So we're actually beating the NASDAQ once again. And even though Cornerstone is down 1.67, okay, because CRF is more the growth version, in my opinion, of the C's funds, because I've looked those up in their holdings, okay, and they have some higher beta names in the CRF fund. Because Cornerstone's down, you would think my portfolio was down huge, but we're still in line with the market. That's because all these other funds are helping as well, okay, to offset that. JEPY, really impressed with it, okay? It's been outperforming every day. I was thinking about putting more in JEPY today, but I'm out here traveling, and again, I have to keep this available withdrawal high. So I have to be able to withstand margin calls like I just explained, and I have to be able to withdraw whenever I want. I have to be able to buy food out here, buy hotels. So I'm not worried about a thing today with Cornerstone. And with PayPal and Square, there's really not a whole lot to say because you can't buy a whole lot of them unless you want to risk your whole account. But let me tell you a few more things to be aware of when you're buying SQY and PYPY, okay? First of all, they're 50% maintenance, which I already kind of taught you about in this video. Okay, that's bad. That takes up 50% of your equity. $100,000 invested, that means $50,000 is taken up by these Yieldmax funds. I prefer Cornerstone that has 30% maintenance. That way I'm left with $70,000 to play with. Okay, I can spend now and go do whatever I want, living freely out of my account. So another thing you need to understand is that the dividends from these fintech names help you qualify for loans. So that's why I'm buying them as well. The more dividends I get, the better. Okay, because the more dividends I get, I qualify to banks for loans, and I can level up my account that way and live freely without a job. I can get a house this way, or a car this way, or personal loans because I have dividends instead of trading gains, because they don't take trading gains. So my margin debt here also of about $200,000 that you see down here below, which will be paid back in less than 2 years because I earn about $150,000 in dividends. So this margin debt is low interest. I negotiated down many times, so now it's about 6% interest. Many of my clients have done the same. It doesn't show up on a credit check, and you can click sell at any time, and it's gone. So I'm just going to have the dividends pay this back, and then my account will grow by the equivalent amount, and my debt will be gone. And then I'll be left with all these dividend-paying assets, paying me cash flow for life, okay? Monthly cash flow for life, okay? So if you're going to buy Square and PayPal, another thing to be aware of is that the upside is capped in these Yieldmax funds. They sell calls, synthetic calls, so your upside is going to be capped. And you don't want to cap your upside in such a high growth area like fintech. So what I'm doing to offset that is I'm buying other fintech names like Coney, that has a large dividend. I'm also, see there's Coney there, okay, down 3%, which we don't want to have a whole bunch in our portfolio with Coney, and that's why, because it's down 3, it's down more than the indexes, even though it has a really nice yield. Also, I have Bitto and Maxi. Here's Maxi here, and I have Bitto somewhere around here. I think I have 1,000 in Bitto. So you can see, you can go to Discord and see my full portfolio. I track my portfolio there. You can update it when I'm not. You can see my portfolio on Discord when I'm not making videos on YouTube. So the other thing I'm doing to get upside potential, upside appreciation in fintech names is I sell puts on the miners. Let's see, Riot. Okay, we have Riot. Look here, let's see, where are my miner puts? There's Mara. I had a put on Riot, but I've sold that for gain. I'm gonna go back into that soon. We have puts on Mara, which are Bitcoin miners. We received $1,200, $1,100, $1,150. Just for selling this put on Mara, and it lowers our cost basis. And if we get assigned, then we get upside exposure to Bitcoin and blockchain names, because these names are high flyers. If we don't get assigned, then I just pocket this $1,100 premium, which knocked down my margin by about $1,000. So if I was at 175 debt, now I'm at 174, and I'm paying less interest on my margin debt. Also, they still participate for you on a given day. Mara, if it has a big day, you'll see that in this column here, $5, it can be up a couple of $100 in one day. So if you combine all these sections, you combine the sold options section here in my portfolio, the riskier names down here with the 1,000 and 5,000, and then you go up to the index names up top, where I have 500 grand in Cornerstone. I have about 50 grand in the Defiance funds here, and I have another 50 grand in Yieldmax funds. This is where I put the bulk of my money to stay safe and outperform. OARC also has a lot of Bitcoin exposure. So, and it has even some overlap with Yieldmax names in it. So that's how I'm getting even more upside participation with fintech and blockchain. So I want you to be aware that some risks of these names are, yes, they're unproven, and Square's not in the S&P. Also, if interest rates rise, fintech's going to really get hurt. They don't have the same access to financing that the major banks have. So is there anything else that I'm leaving out, guys? I don't think so. I think that'll do it for the video, okay? If you need any help doing what I'm doing, living freely out of my account, email me for my e-guides at akintodd48@gmail.com. I have e-guides, 4 e-guides, and then when you buy my e-guides, you get free access to Discord for life and my phone number for life. So you can call me anytime you have a problem. Now that I'm on this trip, it's kind of hard to call me. I get that, but please message me on Discord or email me, and I'll get back to you as soon as possible. So if you like the video, click like or subscribe, all right? And I'll talk to you soon, guys. Thanks.